Interestingly enough, as we have been in special session on both water and health care, we've had a number of things happen in the state of California that have brought focus and attention to government. One of those issues, of course, has been the wildfires that have devastated Southern California. Another has been brought to us by way of what I believe is a mortgage crisis that has swept the nation and has hit California harder than perhaps any other state in the country. A meltdown in our mortgage lending practices that in essence has led to people losing their homes. So much so that the impact is not only felt by people who through their foreclosures have had to uproot and move their children and have to reorganize their own lives and have to deal with the fact that they lost that piece of the American dream that they had. But we've seen it here in the California budget with a $4 billion reserve when we negotiated last year's budget. We're now upside down $8 to $10 billion. And so as all of these things have been going on, the chairman of the Assembly Banking Committee, Ted Lieu, has been traveling around the country, was in Washington meeting with the chairperson of the FDIC, Sheila Bair, as well as the Federal Reserve chairman and members of the Federal Reserve, Ben Bernanke and others. And we have been spending some meaningful time trying to get to the bottom of what is our obligation as legislators and what can we do to help people in need. Already a third of the problem is upon us, and we have seen the impact that it has. If you follow this chart, for example, and look at home foreclosures in California, and if you look at where we were in 2005 and now where we are in the third quarter of 2007, the amount of foreclosures hitting the $70,000 and exceeding, the 70,000 home mark already. And this represents, by the way, a third of the problem. Given some of those, shady loans, as we would say, that were provided to people, that is a third. This will increase another 2/3 over the next 4 to 5 years, which means that if we think we're in trouble now, let's just wait to see what happens. And so we've looked around and obviously are very pleased that Governor Arnold Schwarzenegger has taken the lead to work with a lot of the banks to figure out ways of renegotiating or allowing for loans to, in essence, not trigger those interest rate hikes that would have been triggered, and to try to soften the blow on the problem. But we believe that that is obviously a noble cause. Certainly, it doesn't solve the problem. And so what we want to do today is to put in context what is going on, and then to talk to you about some specific proposals that may or may not be well received by the banking industry, but nonetheless proposals that are necessary to bring this problem and this crisis to a halt. First, we need to know California is ground zero for home foreclosures.